Hello and welcome to an FX Times daily video recap. I'm CMS Forex market analyst Nick Nassad. Today is Thursday, December 10th, 2009. The greenback had a second day of consolidation or sideways trading against the euro and pound, though it did weaken against commodity-linked currencies like the Aussie and Kiwi. The euro dollar found support on late Tuesday trading around the 1.4680 level, and that support has held in yesterday's trading and again in today's trading. While general risk appetite was up today as we had higher stocks in Europe and we had higher commodity prices, the euro didn't reflect a big rise as there's still concerns over credit ratings, especially after Spain got downgraded yesterday, and so any gains by the euro have been limited. Following our move down in this pair, the last two sessions is showing a bit of squeezing action and volatility is becoming very low, but that could be a signal that traders are awaiting for their next signal to either move this pair further down in a breakout of this support, or perhaps we'll have a further retracement of this down move here. The next key fundamental events that could move the market are going to be tomorrow's U.S. retail sales and consumer confidence data, as that'll give an insight into how consumer spending in the U.S. is faring in the fourth quarter. Switching over to the Aussie-US dollar pair, we see that the Australian dollar gained overnight and then extended those gains in early New York trading. We had a better than expected Australian employment report, and as I mentioned, we did have risk appetite, which was expressed a lot more through the commodity currencies and not the euro and other European currencies. In addition to the better than expected employment report, investors seem to be rewarding currencies from countries perceived as having their public finances in order, which includes Australia, New Zealand, and Canada. The rally in Australian dollar first met some resistance from Tuesday's high around 0.9160, but it was able to move above that in New York trading, but then met further resistance at the 0.9190 level, which was our high from Monday. The Australian economy in the month of November added 31.2 thousand jobs, which was the third straight month of job growth and was almost 6 times more than forecasts. That increase knocked the unemployment rate down to 5.7%, also a figure that surprised forecasts, which had called for the unemployment rate to increase slightly. In a chart to the right, we can see that the unemployment rate seems to be topping out below the 6% level. And the RBA governor has mentioned that labor market is progressing better than he expected. Also to note, the rise in jobs was primarily due to full-time work. This report will give RBA Governor Glenn Stevens more leeway to raise interest rates after he has already raised hike rates 3 successive months. So overall, a good fundamental report for Aussie strength. Part of the risk appetite in the Aussie also came from strength in the New Zealand dollar, which has been gaining since the Reserve Bank of New Zealand in yesterday New York afternoon trading. In its interest rate statement, said that it was could be ready to ease its loose monetary policy in the middle of 2010. So we had an initial surge following that announcement that was stalled in this resistance trend line. But in overnight trading, following the Australian employment report and better commodity prices, the pair rose to test its resistance level around 0.73, which was our resistance here from last week. And in mid-New York morning trading, we saw a little move above even that 0.73. So we'll see if that's enough of a rally from the 0.7050 area, and if we are going to see a bit of a retracement, which would keep to this range, or if we have a move above this level in Friday trading. Just to round out our commodity currencies, in a look here at the US dollar, Canadian dollar, we see that overnight the Canadian dollar gained against the greenback, finding support 1.0477, which was our support from early on this week. The greenback did manage to pair some of its losses, however, in New York trading. Also today we had 2 central bank decisions. Let me go over the Bank of England interest rate decision first, where they kept rates at 0.5% as widely expected and stuck to its target for its asset purchase program as the bank tries to ensure the economy escapes from its longest recession on record. The bank is set to review its quantitative easing program again in February, when policymakers will have more data to see how the economy is faring. The BOE Governor Mervyn King has said that he has an open mind to further bond purchases, and removing stimulus too soon could jeopardize the recovery. So the UK is then likely to fall behind other central banks like the ECB and the Swiss National Bank that have announced measures to begin unwinding their emergency measures. The pound-dollar pair, similar to the euro-dollar, stayed within the range we saw yesterday, with volatility decreasing somewhat, and the greenback actually gained on the pound following the Bank of England release. The statement pretty much boiled down to a wait-and-see approach. The pair has found some support the last two sessions. We can even draw an upward sloping support line, though this level around 1.6250 is a support level that goes back to most of October and November, and it's the first time we broke below that level since October 14th. Zooming this pair back to where we were, we see that we're also setting up a bit of a short-term downward sloping resistance level. So this is a pretty classical case of a squeezing consolidation pattern, and we'll see which direction this pair wants to go next. The Swiss National Bank, which also finished its interest rate decision meeting, held rates at 0.25%, but here we had a bit more interesting statement, as the SNB said that while it continues to provide the economy with a generous supply of liquidity, it is going to discontinue its purchases of Swiss franc bonds issued by private sector borrowers. So that's the first step that the bank is going to take to begin unwinding its emergency measures. Also, the SNB said that it will continue to act decisively to prevent any excess appreciation of the Swiss franc against the euro. In the US, the trade balance for the month of October surprised forecasts on the upside, as the trade deficit shrank to $32.9 billion, which surprised forecasts which had called for the deficit to widen further. Exports were up 2.6% following a 2.9% increase in September, while imports, which had surged in September by 5.8%, were up only 0.4%. So the increase in exports and the smaller increase in imports worked to shrink the deficit. The data shows that a weak greenback is helping to spur exports, and that can help the US manufacturing. Also today we had weekly jobless claims come out for the week ending December 5th. Jobless claims rose by 17,000, so that was a bigger increase than expected by forecasts, though the 4-week moving average did continue to fall. Continuing claims, meanwhile, dropped to 5.16 million, a change of almost 300,000 for the week ending November 28th. In the dollar-yen pair, we saw the greenback gain today, but again the move was limited to the range we saw in yesterday's trading. The 88.50 level we saw had acted as an important power line, and today, after falling below that level, the pair is using it as resistance. The support that we saw in yesterday's trading goes back to our resistance level here in last week, but after a break we're finally testing that level now as support, so that's setting up as another power line for us. Now let's turn our attention to what we can expect from the fundamentals in the upcoming session. Tonight, the fundamental docket is relatively light with only New Zealand food prices, while overnight we get Japanese measure of household confidence and the UK producer price index. Tomorrow, the US will post retail sales, import prices, a measure of consumer sentiment, and business inventories, while Canada releases its new housing price index. The main thing that traders will be focusing on will be retail sales, as it will be a good indication of how consumer spending is holding up in the fourth quarter. And that will do it for today's daily video recap. For more news, analysis, and videos, including technical analysis videos, please visit our site fxtimes.com. I want to thank you for watching, and happy trading.